I do think we have to think about the oil supply risks in the event that this does become a broader conflict. We don't know if it is at this point, but certainly it looks closer to a regional war than it did when we last spoke in March.
Welcome to Smarter Markets, a weekly podcast featuring the icons and entrepreneurs of technology, commodities, and finance, ranting on the inadequacies of our systems and riffing on ideas for how to solve them. Together, we examine the questions: are we facing a crisis of information or a crisis of trust? And will building smarter markets be the antidote? This episode is brought to you in part by Abax Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets?
Welcome back to Markets in Transition on Smarter Markets. I'm Dave Greely, Chief Economist at Abax Technologies. Our guest today is Helima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. We'll be discussing the escalating situation in the Middle East following recent Iranian missile strikes on Israel in retaliation for Israeli strikes on Yemen and Lebanon. We'll also be discussing the U.S. presidential elections and what each may mean for global energy markets. Hello, Helima. Welcome back to Smarter Markets.
Thank you so much. And once again, we're on the precipice of potentially a major military development in the Middle East. So every time I meet with you, we're always having to discuss potential geopolitical mayhem.
We're not fortunate for that, but we're very fortunate to have you here to give your insights and perspectives on it. Always happy to have you here talking energy and geopolitics, and this is certainly a day for it. So let's dive right in. Let's start talking about these recent events in the Middle East. Just for our listeners, we're recording this podcast on Wednesday, October 2nd. We don't normally tell you that, but of course things are moving quickly, so we want people to understand when the conversation's taking place. And this is a day after Iran fired a barrage of ballistic missiles at Israel. This came in retaliation for Israel striking targets in Yemen and Lebanon and beginning to have some ground attacks into Lebanon. And of course, we've had the killing of Hezbollah leader Hassan Nasrallah. This feels like the wider escalation that we all fear, right? The escalation of Iran moving beyond its proxies and engaging in direct military conflict with Israel. So I wanted to ask you, Helima, how are you thinking about how this may all play out and what it would mean for global oil prices?
Well, certainly it looks like we're seeing the opening of a second front. I mean, that has been something we've been watching, the Lebanon situation, really since the war began a year ago. We were looking to whether Israel would make the calculation that they needed to move into Lebanon to create a buffer zone, move Hezbollah off the border to enable the return of 70,000 internally displaced Israelis to the north of the country. What we were not anticipating was the rapid ratcheting up of Israeli offensive operations, spectacular covert attacks involving pagers and walkie-talkies, airstrikes that took out in rapid succession the top echelons of Hezbollah leaders. This followed actually what we saw in August, where the Israelis did an operation in Tehran that took out the political leader of Hamas, Haniyeh. And so the real question is Israel now looking to essentially run the table? Does this end in Lebanon now? Or do they have Iran, more squarely in their sights? And following what we saw yesterday, the 180 ballistic missiles that were fired at Israel, does Benjamin Netanyahu decide that now is the time that he is going to go forward with an operation targeting critical military and economic infrastructure in Iran? Or does he mainly focus his operations on Lebanon?
What does running the table look like? Because I remember the last time, you had Iran fire some missiles at Israel in retaliation. It was like, okay, we've made our response, and then it seemed to quiet down. And of course, the fear this time is it doesn't quiet down.
I mean, this is so interesting because, again, when we spoke last, we were in Lausanne at the FT Commodity Conference, and we were on the precipice engagement between Iran and Israel in the wake of the attack in Damascus on the Iranian consular building that killed a senior Iranian Revolutionary Guard official. And then we were talking about if we saw some type of engagement between Israel and Iran, would it be limited? Would it be designed to show strength? while avoiding an outright regional war. And that's really how it did play out. The Iranians telegraphed in advance that they would be launching missiles at Israel. Israel's retaliation was pretty muted considering that 300 rockets and drones had been fired at their country. Everyone looked like they were basically showing that they could respond, and they stood down. Now the question is, given what we have seen in the last 10 days in terms of Israeli risk appetite, does this attack yesterday give Israel the pretext to go in and target, for example, significant Iranian nuclear infrastructure? Do they potentially go after economic infrastructure? And this is why oil market participants, I think, are paying closer attention to this conflict now, is the question, does Israel have Iranian oil facilities, potentially sort of Karg Island? Do they want to essentially say, you know what, it has been Iranian oil money that has funded the axis of resistance proxies, groups like Houthis, Hezbollah, Hamas? Is this the moment where Israel says, you know what, sanctions haven't been robustly enforced, Iranian oil exports that are nearly 6-year high? Do we want to close the ATM that allows Iran to fund all these groups in the region? So is Iran's oil facilities, are they in the line of sight of Israel? That is not something we were really talking about when we spoke in March. We were thinking about, will Iran potentially target regional energy infrastructure like they did in 2019 to internationalize the cost of the conflict? Now the scenarios that we're thinking about more focus on what is Israel looking to do in terms of their engagement with their main regional adversary, Iran.
And interestingly, this escalation comes with a backdrop in oil market where prices have been under pressure recently until the last day or two, where you've had, probably the conversations before this were, what's OPEC going to do? Is Saudi going to bring the 1 million barrels a day back? How does that change the calculus for what Israel might choose to do next?
And we're actually having this conversation the day OPEC's Joint Ministerial Monitoring Committee is meeting. You're right. If we had had this conversation a week ago, we would be discussing whether Saudi was looking to unwind its 1 million barrel voluntary cut, if Iraq and Kazakhstan didn't get their act together in terms of compliance. The question about, has the outlook for demand been fundamentally altered by the softer demand that we're seeing in China? That was the conversation, 48 hours ago. And I think now market participants have been looking through this war in the Middle East, basically have faded the multi-year war, Russia-Ukraine. And now we're basically saying it's been a year of this Middle East war. There's been no major supply disruption. I'm going to focus on Chinese demand data. I'm going to focus on OPEC. I'm going to focus on non-OPEC supply growth. Now they're having to think about geopolitics again and the potential for an October surprise in terms of a war in the Middle East that is more disruptive to energy markets than they anticipated. The interesting follow-on question, which I'm sure you're going to go to, is if we do end up in a situation where there is, material disruptions of supply, what is the response mechanism from countries like Saudi Arabia? And obviously, the White House would once again pick up the phone and call Riyadh like we always do when there is a supply disruption, when there's a run-up in prices. And I do think the Saudis would be responsive, but just the question is would it be an immediate backfill of any losses? Would they wait to see how long these losses were going to last? Because I think the Saudis are also a little bit reticent to leap first into these situations. Remember in 2018, when we exited the Iranian nuclear agreement, we called the Saudis and said, hey, look, we're taking Iran to zero. You put 1 million barrels on the market. They put 1 million barrels on the market. I was at that OPEC meeting where Khalid Al-Fallah was like, Saudi Arabia will do it alone if necessary. And then in October, we issued exemptions for importers of Iranian oil and the market collapsed. And so I do think the Saudis are going to be cautious about how they look to fill any loss of supply. They're going to look to see what's the duration of this, what's the size of this. I think they're going to be, not that they're going to slow walk it, but I think they're going to be cautious. I think they will add barrels, but they're not going to want to sort of flood the market in anticipation that the losses could be extended.
How do you think, in addition to that, there have been tensions between Saudi and Iran for a long time as well? How does that change how the Saudis think about this moment?
I love having these conversations with you, David, because literally was at the March 23 FT conference. I think we had this conversation because I had just returned from Saudi Arabia. Saudi Arabia and Iran had just announced a normalization of relations. And it doesn't mean that Saudi and Iran have become best friends in the region. But I think the Saudi decision to normalize with their longstanding adversary was driven by their need to de-risk their security environment. They were really concerned about, is the United States actually going to come to our assistance if there is another attack on our country, like we saw in 2019 when the Iranians hit the Abqaiq facility. And I think they basically decided that with the United States support unclear in such a situation, they were better off making a deal with Iran to ensure that Vision 2030 could proceed without potential security hiccups. And so I think the Saudis are pretty confident that that deal with Iran is paying dividends. We haven't seen, for example, any Houthi attacks targeting Saudi infrastructure like we had seen before. We haven't seen Saudi ships being targeted in the Red Sea. And so the question is, does this deal, does it ensure that Saudi wouldn't become caught in the crosshairs if there is a more serious confrontation involving Iran? Would Saudi be insulated from the Iranians saying, you know what, Western countries that are backing Israel, we're going to drive up your oil prices by attacking Saudi Arabia? I think the Saudis, believe for now that the Iranians are interested in maintaining that relationship with the kingdom. But that said, that does not mean that the Iranians wouldn't look to target other regional energy supplies. It wouldn't mean that everybody in the region is safeguarded. So I do think we have to think about the oil supply risks in the event that this does become a broader conflict. We don't know if it is at this point, but certainly it looks closer to a regional war than it did when we last spoke in March.
And even without going to a full regional war, I think just you brought up the Houthis in Yemen and the Red Sea, to what extent, short of a direct conflict between Israel and Iran, would Israel going after some of the Iranian proxies like the Houthis in Yemen, would that possibly make security in the Red Sea safer? Is there a possible path there?
The interesting question will be, is Israel able, through airstrikes, covert action, some ground operation, to significantly alter the security environment in the region by inflicting major operational damage on a number of these groups? The question, I think, is, can they do everything everywhere all at once? And I think that is the challenge, is that they are still having Gaza operations. They are now moving into Lebanon. Hezbollah's leadership has been eviscerated, but they still retain their rockets. They still retain significant manpower, both in Lebanon and overseas. The Houthis are, there's no signs that they are backing off this fight. And then there are these Iraqi militias and militias in Syria. And so I still think the axis of resistance has the ability to cause significant problems for Israel, for the United States in the region. I'm not sure that they're going to be able to strike a blow against every group that Iran backs in the region. That's why I think the interesting question is, do they want to go to the principal sponsor at some stage as opposed to the various affiliates?
And when you think about the Israeli mindset right now, what do you think's driving them? Because they are certainly taking on a lot more than we've seen in the recent past.
When you ask the question about what's driving the Israeli mindset, there's so many great experts on the Israeli political scene that really dive into different personalities, because we look at the Israeli wartime cabinet and you have, individuals in that cabinet that outside a security crisis would not be working together particularly well. And so the question is, are there differences in tactics and overall strategy between Benjamin Netanyahu and Yoav Gallant, the defense minister? So the question is I think it comes down to, what does Benjamin Netanyahu want? The people have said that he has always been squarely focused on the Iranian nuclear program. He has always that he would prevent Iran from becoming a nuclear power on his watch. And so the question is is the time now for him? And you mentioned we were going to discuss the US elections. Does he believe that he has a unique window with the US elections basically a month away to be able to engage in military action without having strong pushback from the United States? When we have significant military assets in the region, if he were to decide that now is the time to set back this Iranian nuclear program, is the United States really going to stop him? But post-election, you could see, I think, both a President Harris and a President Trump becoming very wary of getting entangled in another major Middle East war. I mean, President Trump has really talked about supporting Israel, but remember, when he was in power, he was not in favor of deploying significant U.S. resources to the region. He had very clear red lines, like the killing of an American citizen was a red line for Trump. And remember, then he took out Qasem Soleimani. But he was pretty clear that he did not want to repeat forever wars in the Middle East. So again, if you're Israel, you're probably looking at this window and you're thinking, maybe this is my best shot.
You brought up U.S. military assets in the region, and I wanted to ask because they were involved in the defense of Israel against this ballistic missile barrage, a number of U.S. ships shooting down Iranian missiles coming in. What is the risk of the U.S. military being dragged into this?
Even if another country in the region starts the fight, do we have to finish it? And certainly if you think about the Iranian nuclear facilities, there had been a view that certain facilities, particularly the Fordo facility, which is seen as highly impenetrable, that if you wanted to really disable that facility, if you were the Israelis, you would likely need U.S. air support and U.S. bunker busting bomb technology. That had been the previous view to disable that facility, that Israel could do significant damage against a facility like Natanz, but Fordo would require assistance from the United States. And so the question is, again, if this conflict were to evolve in a way that it becomes more direct Israel-Iran, not just simply like these one-off days of missile strikes and everyone stands down, would the U.S. essentially have to come in and basically finish the job?
I definitely want to come back to the U.S. elections with you, but I feel like I should also ask you a little bit about the other scenario. What happens if the situation doesn't escalate? How are you seeing the oil market play out? You said we would have had a very different conversation a week ago, so I'd like to color in a little bit of what that conversation might have been looking like. A number of observers were feeling that we could be setting up for an oil market washout, like in 2014. So I was curious how you were thinking about that.
I'm really showing my age on this podcast because so many of us of a certain age remember the Thanksgiving 2014 meeting where all oil market watchers had to leave the table and basically tell their families, like, I'll see you in like 6 hours. But I don't think that we're necessarily set up for a repeat of the Thanksgiving disaster for oil market watchers. But I do think that it could be a more limited, I don't want to necessarily call it a price war, because in 2014, basically Ali Naimi was like, we're doing nothing in the face of US shale. Like, shale, you're going to break first. And he kept saying, like, we're not cutting. And eventually, come 2016, they were like, you know what? The cost of this has been inordinately high. Shale has suffered, but it is not broken. And now we're going to have to partner up with Russia to climb out of this inventory hole and manage the market. So I haven't heard a lot of enthusiasm for that experiment. What I have heard, though, increasingly, and we've been writing about this, is post that June meeting when there was a taper tantrum, is that the Saudis were like, look, we have this 1 million barrels in play. Like, it's our lollipop. We gave you that in the summer of 23 to show our goodwill to the market, to the rest of OPEC. We were going to take more burden upon ourselves to balance this market. They called it a lollipop. And the question is, like, are the Saudis now saying, like, you know what? Countries that have been overproducing and have not been complying with their reduction commitments, like, we're going to put you on a diet. And the collective agreement's still going to run through year-end 2025. But our barrels, our unilateral barrels, sorry guys, like if you don't get it together, like we're just putting you on a diet. And I think that from their perspective, that is what is in play. It's basically like, look, we can decide the timing and the quantity of the phase in of our voluntary barrels. And we're not going to basically be taken for a ride continuously by our partners within OPEC Plus who just think that we have no choice but to continue to do this because of our high spending commitments. Like we can cut spending. We can scale back our implementation of some Vision 2030 projects. We're proceeding with our diversification goals. Like we've added 1 million new jobs in 2023. Like we're okay. It's not going to be great for our balance sheet, but like we can make adjustments. They look to a country like Iraq and say, hey, you know what? Like you have the most expensive public sector payroll in the region. Can you endure $50 oil? Is this going to be easy for you? Like you don't have the ability to massively ramp up exports from here because of constraints that, Basra, your midstream capacity constraint. Is it worth it for you guys to keep producing several 100,000 above your OPEC numbers? 70 might be painful now, not perfect, but imagine what 50 is going to look like for you. And you don't have large foreign exchange reserves that you can call on in a crisis. You don't have large sovereign wealth funding holdings overseas that you can tap. Like we can endure lower prices easier than you can. So I think that's where the conversation lies right now. And if Iraq and Kazakhstan kind of don't get it together, like, do I think there's like a risk that the Saudis at the December meeting are going to be like, yeah, that lollipop, like it's coming back.
And after that infamous ruined Thanksgiving of 2014, that OPEC Plus was really formed in the wake of that. And now we've had Russian oil off the market or sanctioned for about 2 years now. And Russian President Putin's recently been making statements suggesting Russia may limit certain exports of certain commodities like uranium, titanium, and nickel in retaliation against those sanctions. But I guess I wanted to ask you like the broader question of, in the context of oil not reacting that much to what we're seeing in the tensions, has the market become kind of a little too relaxed about these big geopolitical events? And have the Russian sanctions and their impact or lack of impact been part of that?
100%. Go back to the Russian invasion of Ukraine, those early days, February, March. And when you had for the first time a G20 central bank sanction, when we sanctioned the Russian central bank, when we disconnected Russian banks, really important banks like, Sberbank from the SWIFT payment system, a lot of market participants were like, wow, like this is going to impact oil. Like we're going to see the imposition of secondary sanctions on Russian energy because that's what the US did to Iran. And we say this is an existential war for the post-world order in Europe. Like we're going to go after their main ability to fund this war. And yet, think about, you mentioned sanctions on Russian energy. They've been quite circumspect considering what we said was the threat posed by that invasion. Like we did not go after energy transactions. Remember, when we disconnected those banks from the SWIFT payment system and sanctioned the G20 central bank, like we, excluded energy transactions. Like we only came up with price caps after the EU passed the sixth package of sanctions, which not only barred Russian seaborne oil going into Europe, but barred the provision of services to move those barrels to third markets. And all of a sudden, I think Janet Yellen was like, oh my gosh, like we could see 3 million Russian barrels off the market if there are no EU and UK services to move those barrels to India. So think about price caps were designed to keep Russian barrels on the market, essentially saying, yes, Greek shipping companies, you can move those barrels to India as long as you certify that those barrels are below the cap. But again, it was more of an inflation reduction measure as opposed to a Russian revenue reduction measure. Like we were very focused on keeping the market well supplied and setting the cap at a number that would still provide Russia an incentive to move those barrels. And Russia was like, okay, we can go to the gray market as long as we're not using these EU covered ships. Like we can sell it at whatever we want. We can, comply to a certain extent. We can basically have optionality to figure this whole thing out. And what we've seen is that those measures did allow India to back up the truck and take those Russian barrels. So we did not see that multi-million barrel a day disruption. And because market participants thought that was possible, all of a sudden they were like, okay, we didn't see it here. When the war began in the Middle East, they were like, you know what? I'm not going to take that bet again. Like, you better show me that those barrels are coming off the market before I'm going to get bullish on a politically driven supply disruption.
And before I let you go, we've got to talk about the U.S. elections a little bit more. You know, the vice presidential debate was last night. Polls remain tight. I wanted to know, how are you thinking about the implications of an election for global energy markets? And how do the paths forward diverge depending on a Harris or a Trump win in November?
What I think is interesting is, like, President Trump, he's consistent about his drill baby drill, American energy dominance. That has remained the rhetorical playbook for President Trump. But I thought President Trump was so interesting because remember when he came into office, he had like the OPEC of the 1970s view, like, remember the gas station lines. And he, every time prices got too high, he'd be like tweeting about OPEC, being like, you get these barrels on the market. And yet, when we had that collapse in prices in 2020, when we had the COVID demand shock and the Russia-Saudi price war right in the middle of that, President Trump, when he was getting those calls from these U.S. producers saying, like, you know, we could go out of business if you don't step in, like, he became like the de facto president of OPEC. Remember when Mexico didn't want to go along with the deal? President Trump came up with a Mexican workaround. Like, all of a sudden, he helped broker the biggest collective supply cut in history to stabilize prices. So he started in one place on OPEC and ended in another. So you never know how they're going to change according to events. But again, it was this idea that, like, American energy resources are being threatened. So he was going to, like, come into action. I think Kamala Harris is fascinating because when she ran in the primaries, she kind of ran as a California Democrat, you know, keep it in the ground. You know, she was one of the sponsors to the Green New Deal. When she was an attorney general in California, she sued the Obama administration Interior Department to prevent fracking off the California coastline. And then she joined the ticket with Biden and walked back the fracking ban. But now if you listen to her in a presidential debate, she's evolved from saying not only, like, am I not going to ban fracking, but remember, she said, like, American energy, you know, production is important to lessen dependence on foreign oil. And I was like, oh my gosh, we're back to the all of the above. And I thought that was a very interesting evolution. And so, you know, it's a question about when she comes into office, would she revert back to her, you know, more climate absolutist credentials? But I do think that this is where the Democrats have kind of landed, that when you get hit with, you know, run up in oil prices, gasoline prices become painful for consumers, like, they do become very focused on keeping the market well supplied. And I think certainly from the Harris perspective, seeing the role that natural gas played in helping Europe. I mean, the reason we didn't have a winter of discontent was, you know, U.S. natural gas really came to the rescue of Europe. And so I do wonder whether there has just been a change in her thinking about the importance of U.S. production to help mitigate, you know, the power of some energy producing states like Russia. So is she going to now govern like she spoke in the last presidential debate?
And there's always the rhetoric and the reality. If you were to be the advisor to the next president, whoever it was, what would you tell them is, like, the big geopolitical reality that they're going to need to grapple with when they come into office?
I think that the question about getting overtaken by events and making sure that you have the resources at hand to deal with unforeseen circumstances. Again, like, if we think back to that Russian invasion of Ukraine, I mean, Europe was helped out by better weather than expected, but Vladimir Putin was absolutely intent on giving Europe a winter of discontent to show them the cost for supporting Ukraine, essentially asking them, you want to choose between heating and eating, like, is this really worth it to you? And U.S. natural gas, you know, combined with better weather, really set back that plan for Vladimir Putin. And so thinking about being prepared with the resources to deal with crises and not being caught flat-footed.
Thanks again to Helima Croft. Managing Director and Global Head of Commodity Strategy at RBC Capital Markets. We hope you enjoyed the episode. We'll be back next week with another episode of Markets in Transition. We hope you'll join us.
This episode was brought to you in part by Abax Exchange, where trading in centrally cleared, physically deliverable LNG and carbon futures contracts is now underway. Ready for smarter markets? Contact us at onboarding@abax.exchange. That concludes this week's episode of Smarter Markets by Abax. For episode transcripts and additional episode information, including research, editorial, and video content, please visit smartermarkets.media. Please help more people discover the podcast by leaving a review on Apple Podcast, Spotify, YouTube, or your favorite podcast platform. Smarter Markets is presented for informational and entertainment purposes only. The information presented on Smarter Markets should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Smarter Markets are those of the participants and do not necessarily reflect those of the show's hosts or producer. Smarter Markets, its hosts, guests, employees, and producer, Abax Technologies, shall not be held liable for losses resulting from investment decisions based on informational viewpoints presented on Smarter Markets. Thank you for listening, and please join us again next week.